In this video, traders, we're going to look at how to deal with an unexpected quick profit. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so this video is sponsored. If you haven't heard of them yet, or if you haven't seen them, go and check them out. There's a link to them in the description below. They're a channel sponsor, our partner, CFDs, spread bet, multiple platforms. You can run automated strategies on MT4, MT5. You can use C-Trader. Great support. Obviously, they are regulated. We're going to check them out if you're looking for another broker or looking for a backup broker. Always handy to have a backup broker as well. All right, so how do you deal with an unexpected profit? So we've probably all been in this situation. If you haven't yet, and you're probably quite new to trading, this will happen. It's a nice thing to happen. But often how you deal with this, it's just as important as if you're losing trades, or how you deal with kind of drawdown, your equity curve, how you deal with selection of trades. It's one of these things that doesn't come around so much. Unfortunately, it'd be nice to have these nice unexpected windfalls every now and then, but when they do, it can be a real differentiator. If you trade it correctly, it can make your quarter. If you trade it poorly, it can be just something that upsets you and frustrates you moving on and ends up kind of disrupting your trading flow anyway. So you've really got three kind of things. And imagine you're in this situation here, the market just suddenly shoots up, and this is on the assumption you haven't already got a resting limit in, and you're long. So you're long, all of a sudden, bang, the market shoots up, maybe it gats up if you're holding some sort of position over the weekend or overnight. Anyway, you've got a big windfall type profit that's way more than expected. Now, the first kind of option is to bank it. And many people go along that line and say, well, you know, your plan was here. This is your target. It's way above your target. Don't look a gift horse in the mouth. Take the profit. And there's some validity to that. And I understand why people do that. I don't say that's a wrong thing to do. You expect the trade to go there. All of a sudden it's ripped through. And now you're way more than you expected. You're kind of 10R instead of 3R on your trade. You might want to take it, and that's fine. The other option would be to leave it, and leave it means, hey, it's moving in your direction, I don't need to do anything with it. I don't like this option. I think that you've got to be aggressive with your management, whether you are deciding to take something off or whether you are doing something. Just leaving it just seems like a little bit too passive for me. Whether you drag a stop up or whether you adjust how I'm going to kind of jump the gun a little bit, but doing something is better than just leaving it hoping it's going to continue. You know, I think that because very often, don't forget guys, these spikes can kind of fall back straight away. And that's what you're trying to mitigate against. You know, sometimes it can be the start of something big. If it's some kind of news event, some kind of catalyst that is driving that pair or driving that commodity or whatever you're trading in a different direction, you're in a great position because you've preempted that. You're in from down here, whatever it is. You've got a very nice cushion. You can now milk as much as you can out of the deal. But if it's not that, in reverse, it's just a quick spike, you want to try to protect against that if you can. There's a fine line. It's a grey area. The third thing is my favorite is a hybrid. You know, like all trading guys, I think it's black and white. We can create this kind of mixture of stuff that suits you as a trader. So hybrid is kind of doing things. Don't forget, you know, a lot of the things we talk about on this channel, guys, are not necessarily the most logical, and some of the kind of pushback I get is that it doesn't make sense logically. It doesn't make sense, you know, from a statistics perspective, and that's true. You know, and I've openly said, hey, you know what, it doesn't make sense sometimes to do this. But we're not algos. We're not trying to create algos here. That's a different animal. We've got to understand that our personality, our response. You know, talk a lot about the chimp. If you read the chimp paradox. You know, how we respond to things so we don't get frustrated, so we can stick to our rules, so we don't get out of line with discipline, so we can do all the things that we know we need to do. Very often we're doing things to help that process rather than the mathematical, logical thing of, hey, this is what happens mathematically. It doesn't make any sense to do this. Yes, but sometimes it makes sense for how we behave, our personality. And I think that's, for me anyway, that's worked fantastically, thinking of it like that. And maybe that's something for you to consider as well. So we do something like closing some to feed the urge, because if you think about from a psychological perspective, if you suddenly see you're expecting to make $1,000 on that trade, all of a sudden you're up 10, you know, that urge to take that 10 is going to be quite significant. You're going to be like, oh, you know, it's 10 times more than I wanted. I'm going to take it. Yes, brilliant. So we don't want to fight that. We don't want to say, no, we're not going to take anything. So I always think that closing some to feed the urge. How much is up to you? Maybe it's a half, maybe it's a quarter, maybe it's a tenth, maybe it's 3/4, whatever. But then you're kind of keeping that urge under control, because if you don't take it and it comes back and you've lost the 9, you're like, oh man, I knew I should have done something. At least then you've done something. So yes, you might be saying, well, it doesn't make any sense to do that. I always think if you see something unusual like this, take some off the table. Plan how much. If it's half, like I say, whatever it may be, take some off the table. Then what you've done is you've bought yourself some kind of urge time, if that makes sense. So that voice in your head's going, take it, take it, take it. You've kind of peacefully calmed him down. He's like, fine, sit in the corner. You've got your little profit there. Just relax a little bit. Let me review the situation logically without you shouting and screaming and demanding to take this profit off the table. Now you can review the new situation. What caused the spike? Do we have some sort of news? Is it just a technical breakout? Is there some sort of more fuel to the fire? Where do I think this market's going from here? How do I think I will respond to this? Etc, etc, etc. So your normal thought process, your normal running through and extrapolating and treating as a new plan and saying, right, I'm along from here. Where can I expect it to go? Where do I not want it to go? Where would negate the theme? All this kind of stuff. Then you come to tightening your remaining stops. Bringing that stop so you're not giving too much back. Again, up to you how tight you want to do it. Maybe you want to push up behind a moving average, just like a 5 period or 10 period. Maybe you want to kind of stagger it so you're coming out half here, half here. Maybe you want to use a kind of fib on this, or maybe you want to segment into quarters. Whatever. We don't have to go operational details now in the video, but tighten that remaining stop loss, and then constructing a new and adjusted trading plan. So you've reviewed the situation, you've tightened your stop loss so you protect some of that profit, and now what's your new trading plan? You know, if it's such a good idea, maybe you want to put that half back on. Maybe like, you know what, this is great, it's pulling back. I'll put the half on if we pull back to a moving average or if we flag or whatever. So you're not acting from an emotional perspective. You've fed that by closing fed the urge. Said, right, that's my urge to take this profit is calmed. Now I'm going to get a professional trader out of me, and if I want to put more size back on, I can do. If I want to close the position totally, I can do. If you think, hey, it's a spike out of nowhere, there doesn't seem any catalyst to it, it's low volume, in a low volume environment at the moment, I just got lucky, you take it all out. Or you ratchet your stop right up and go, hey, it's below the last candle or whatever that may be in your time frame. I'll give it room and that's it. I'll give it no real room. I literally tighten that leash right up and I'm going to come out. Or you go, hey, this could be the start of a multi-month move here. I'm a swing trader. I was looking for a 4-day move. Hey, it's really starting to get going. You know what? Maybe I'm going to ride this now, or I'm going to take 80% position off and keep a core and concentrate on my more aggressive trading with the other stuff, but leave that ticking over with a stop that I review every day. Whatever it may be, the point is having some kind of structure and some kind of plan. And my opinion is that closing some is a good idea. Everyone's different. Everyone's personality is different. But I know for me, if that happens, I've always got that voice that says, hey, take that profit. Great profit, you weren't expecting that. It's way out of what your expectations were for this trade. Grab it, take it. And sometimes just keeping that calm and then coming through a plan after that is a good way of dealing with it.